Hello everyone, and welcome to another edition of ACY Economics. We've had a whole raft of data out recently. Overnight, of course, we had third quarter GDP for the United States dropping from 6.7% in the second quarter to just 2% in the third quarter. Remember, when that second quarter number came out, everyone was forecasting 7.5%, even 8.5% for Q3, Q4 economic growth in the United States. So it's certainly been a massive turnaround, and we've been ahead of the curve in calling that US economic weakness. We knew the US economy was going to be hit by that twin tsunami of inflation and Delta. And of course, at first, hardly anyone believed us, and they thought that was extreme terminology. But as we can see, that is exactly what has happened. And the United States and the world are not out of jail as yet. So there are further negative and rather sort of dampening economic forces ahead, challenges ahead for the US economy and the world economy. The surf's just picked up as the ferry went past. That's life on Sydney Harbour. In Australia, speaking of Sydney Harbour in Australia, we've just had retail sales come out and they're up 1.3%. But it really is only a small rebound from the losses of previous months. And retail sales in New South Wales, for instance, even with albeit partial opening up, but certainly the opening up of retail, is still 12% down on what it was before the lockdown began. So a lot of ground to be made up, and to be honest, I don't think all of that ground will be made up. I think long-term damage has been done to the New South Wales, Victorian and Australian economy, and it's going to be 1 to 2 years before the economy gets back to being what could be called anything near normal. Certainly we're going to have positive GDP growth, but it's going to be below trend. We also had released today from the Bureau of Statistics the financial year GDP outcomes for the Australian economy. And what we saw there was a movement from flat 0% in financial year 2019-20, and in the financial year 2021, just finished, we only saw 1.5% GDP growth. So that's 1.5% growth over an entire 2-year period. But everyone, all our political leaders just want to say how fantastic everything is. No, it is not. And there are still plenty of problems ahead. The idea that vaccinations equals economic growth, I've been warning of for some time, is a very worrisome one. In Australia at the moment, we're seeing some of the most severe and strictest lockdowns still imposed on those who are unvaccinated. It's among the highest, toughest restrictions in the world. And we have to realise that in New South Wales, for instance, about 86.5% are now double dosed. So it's around 13% of people, 13% of the adult population that are still disallowed to participate in the normal economy. And that's quite harsh for that 13%, because a lot of those people are working people with families. They need to be doing their jobs. They need to be involved in their children's lives at sporting events or whatever. And they are greatly restricted, and they're possibly restricted, and in many cases are restricted from even earning their usual living. And we have to rethink that approach of, we've gone from rewarding the vaccinated to punishing the unvaccinated simply because they're the minority, and if you're part of the vaccinated, you're the majority, and you can bully the minority. And it's almost as if that fear of COVID that used to be attached to a virus has now been attached to the unvaccinated people. And that will continue to be a dampener on economic growth going forward too, for both Victoria and New South Wales. We also saw producer prices out today, up 1.1%, 2.9% for the full year, but certainly accelerating in this latest quarter to 1.1%. And that just goes to show that the inflationary pressures in the Australian economy are here to stay and likely to persist for some time. I won't go over the RBA again, simply to say they've done a very bad job on their policy settings. Their sit on their hands approach until 2024, I'm sure, is about to be thrown out the window, possibly within the next week. And we called it first at ACY that would be happening. and they have to move. If they move their guidance from 2024 to 2023, that will be ridiculous. So that's probably what the Reserve Bank of Australia will do. What they should do is scrap that forward guidance and say we will be flexible and adjust to events as they unfold in this very volatile time. That's the policy of every other central bank in the world. Why it can't be the policy in little old Australia is probably because the Reserve Bank doesn't recognise that it's such a small bank anyway. And it needs to really rethink, as the OECD said, it needs a major urgent review of both its board and its charter. So we can expect, and we're forecasting, I'm forecasting, the Reserve Bank of Australia will, without itself knowing yet, be hiking interest rates in 2022. The Commonwealth Bank of Australia, CBA, joined our forecast just a couple of days ago. So that's two financial institutions in Australia now calling for forecasting that there will be interest rate hikes in 2022, and that will have a profound impact on some of the asset bubble areas that have been created within the Australian economy, and that can't be argued against, that prices are definitely inflated in some areas of this economy, and that is a function of the easy money party Australia has been enjoying for some time. Other economic data around the region today, we saw terrible outcomes actually for construction, industrial production in Japan, South Korea, retail sales remaining reasonably firm in those countries, but certainly industrial production is falling all around the world. And that was a precursor to the Great Depression at the beginning of the last century, or the early stages of the last century. I'm not saying we're going to have a Great Depression or anything, but I'm just highlighting the point that falling industrial production and manufacturing around the world, which is also the case in the United States and in China, is not a good thing. And for equity markets to continue to skyrocket higher is slightly problematic. That's all from me for today. I hope our service continues to help you and give you a different view on the world from what you may be reading in most of the mainstream financial news headlines. But we do like to say it first, and we do the hard work to call it as we see it. Thank you very much for watching our show. Clifford Bennett, Chief Economist, ACY Securities.